morning, everyone. Today is July the 10th, about 5:40 in the AM PT. And in this video, I want to talk about a call is a put is a call, a put is a put, a call is a call, and a put. All right, let me use, I'm going to remain in the futures world, and let's go over to the SPOOs, the micros, which, by the way, are down a hair, about a point and a quarter, point and a half. Let's go out to, it doesn't much matter, I'll go out 21 days, and I'm going to create a straddle, which is buying an at-the-money put and an at-the-money call. And let's take a peek at the analysis tab and view what this looks like. So I have some positions on in the mess. I got a mini mess in the mess. Let me highlight the straddle I just constructed, and we're going to view the analysis tab here. Let me shrink this down, bring it over. Okay, so this is an at the money. This is a straddle at the money. So I bought an at the money put and I bought an at the money call, and notice that this is a bet. This is a straight up bet on volatility. I want volatility to increase. I don't care about the direction of the market in the future. What I want is for it to move a lot, either to the upside or move to the downside. So that way it can get into either one of these profit tents in the green. Let's just say at expiration or before. I can also be somewhere in the profit tent as long as the magnitude of the move is large enough for me to be in the profit zone. Okay, I'm going to clear this. And note, I will get back to this in a minute. Buying power here is $1,018 at the money straddle, 21 days out in the micro E-mini. I'm going to clear it. I'm going to go back to the table, and this time I'm going to buy. I'm going to buy I'm going to short. I hit the bid there, so that's fine. I'm going to short a futures contract in the E-mini, and I'm going to buy 2 at-the-money calls. Okay, and let's go back to the analysis tab and take another look. Now note that this is the exact same trade as the straddle that I created a minute or so ago. However, this one is constructed by buying 2 calls at the money and selling 1 futures contract. It's the exact same trade. Note that the delta, as in a straddle, is basically effectively 0 here. Beta weighted delta is different, but the delta of the underlying here is 0, just as it would be in a straddle. Also note that in this case, the buying power is $1,550, and I'm circling it there over at the right. Follow the mouse. It's $1,550 and change, and the other one was just over 1,000. So for the same trade, this one, constructing it this way, costs an extra $500. And regardless of the size account you're using, this would be an inefficient use of capital because you're spending 150% more on buying power to construct it this way. Even though it's the exact same trade, the delta is the same, this trade is an extremely inefficient use of capital. The analogy in poker would be making an inefficient and completely unnecessary bet size. Let's say that, and you probably see this all the time in whatever poker game you're in. Old Man Coffee gets to the flop, heads up, and it's a 9 high board. And of course, he has aces, maybe kings, and he plans on betting all 3 streets. And what he bets on the flop in terms of the size of the pot is probably pot or more. If there's a flush draw out there, then he's probably going to bet more because Old Man Coffee is in it. He looks like he's been dead for almost a month, and he's terrified that the flush will come in and crack his aces. So he's going to bet more than he usually does when he sees that. It's an inefficient bet size because everyone knows this guy has aces, maybe kings, and he could bet a lot less. He's risking a lot less. That would be a more efficient use of capital than betting pot or bigger because he's terrified of the flush draw coming in and ruining his day. All right, so note again the efficiency or inefficiency in usage of capital. Also, keep in mind that this is in the futures market, which has more leverage than stocks, than doing options in stocks or than trading stocks. And this provides you with plenty of opportunity out there. We have futures and SPOOs, we have NASDAQ, we have crude oil, we have gold. So there's plenty of opportunity out there to use the futures market. I myself, note one time, let me see, this 1550, I'm going to go back and create the straddle. Let's take a look at the buying power again. It is kind of amazing. Okay, 1023 for the exact same trade. Anyway, I myself have positions in various futures markets. I have the Aussie dollar, I have the euro dollar. I'm working something in gold right now. Crude oil. I have a trade in gold. I really should have just made this a straight up strangle, but this is very, very wide. A wide and deep iron condor. But anyway, the point is the futures market can provide ample opportunity for some interesting trades. I got bonds, I got corn, yada, yada, yada. And you also have the advantage of the market being open basically 24/6, so almost 24 hours a day. Most of them shut down for about 1 hour during the day. But this goes on 6 days a week, which is nice. So if there's something happening at an odd hour of the day or night, you don't have to sweat it out until the cash market in stocks opens in New York. You can do something in the futures market. All right, that is going to be it for today. Have a nice day, and thanks for tuning in.